You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I got the chat open. Love everybody coming in. Say good morning, everybody. Hope all is going well. So I've done nothing but trade my entire career. 27-year career. I've traded at every major exchange in Chicago, the Chicago Board of Trade, the Chicago Options Exchange, the Chicago Mercantile Exchange. And again, what I do every single day is I just go over the market and look for opportunity with you guys. Today, I want to go over the tariff extension. Ends July 9th. What sectors is that going to move? Let's talk about Toyota a little bit, and then I want to talk about the overall market. So let's do it. Sound fun? All right, guys, I'm going to share the screen. I got the questions up. Feel free to ask any questions that you want. I will try to get through all the questions as well. If you have not yet, give a thumbs up, subscribe. It really helps. Share this with your friends. I appreciate it. All right, guys, let's go. Yesterday's video, markets going up. That was the title of yesterday's video. Why? Well, the market's going up because volatility is getting sucked out of this market so fast. So when volatility gets sucked out of the market, markets go up. We look at the volatility using the VIX, the fear index. You can look at the VIX 9D. You can look at the VVIX, which is the VIX of the VIX. When volatility gets sucked out of the market, like it's doing right now, it's the summer, it's Friday, markets are going up. So let's look. I don't want to look at that. I want to look at what we looked at yesterday to determine that the markets were going to trade higher. That's what I'm going to pull up right now. This is a tool that we have, guys, in our short-term options. And yesterday, I was going over this tool as just a way to show you this is volatility. The VIX is a measure of 30 days, okay? The VIX, 1659. These are shorter-term measures of volatility. When we have this beautiful shape where the volatility is lower in the shorter time frame, in the quicker time frame, and the volatility is higher in the further out time frame, that is very bullish. Bullish. If I pull up, put this down here, and if we look at the volatility indices, VIX 1 day is down a bunch. VIX 90 is down to 1323. The VIN is trading 1627 now. The VIF is trading 1726. So as long as these stay offered, guys, the market is strong. The market is healthy. Think about it using common sense. When there's more risk in the market, there's a higher probability of trading lower. Okay? Something else that we talked about yesterday that I want to reinforce, and I even wrote it down. We need to react to what the market is doing, not what we think it should be doing. A sucker's play is when all these news comes out, CPI, PPI, durable goods, all these different announcements. They don't mean too much. They just don't. Follow the market. People get in trouble when they look at the market and the VIX 9D is lower. The VIX is lower. Volatility is coming out of the market. And then some durable goods number comes up. And somebody looks into it and that's, I follow the durable goods closely. That's bearish. And so they have in their mind that it's bearish, but volatility is low. If volatility is low, don't be bearish. react to what the market's doing, not what you think it should be doing. Respectfully, you don't know what it should be doing. We don't. Goldman Sachs might. The Fed might. We react to what the market's doing. We're humble. We accept that we don't have all the answers. Hopefully that makes sense. All right, guys. I thought it would be cool. I'm always looking for areas of volatility in the market. So I wanted to look what areas are most exposed to the U.S. To the July 9th tariff deadline. Okay? What's most exposed to the July 9th tariff deadline? 4 stocks. I want to go over these 4 stocks. Before I go over these 4 stocks, is anybody not in the challenge? Anybody on here? Can I get a show of hands? Is anybody not joined the Masters in Trading Challenge? We just released the Masters in Trading Challenge. There's the link. But just to give you an idea, Plug shared this in our Discord, and I really appreciate this, Plug. I just want to share it with everybody. I'm not going to read the whole thing. Plug has been in the community for a little bit, guys. Here's what he says. This is truly a trade school that pays you back in spades for your investment. JR wants you to learn. JR wants to teach you. Every time you hear him and watch him, you'll feel in the bones he is doing this for you. He will teach you and show you the tools that will grow your portfolio, learn well, apply, and profit. So, Plugin, thank you so much for sharing. It is not too, no. It's not too late. It's rolling. masterthantrading.com/challenge 2025. You can start going through the material this weekend, get your buns in the Discord, and see what Masters in Trading is all about. So join us, Masters in Trading. I even think there's a full money back guarantee. So go check that link, see for yourself. Okay, let's go and look at the July 9th deadline. So full disclosure, I put this together yesterday and was all excited to potentially share a trade with you guys today. What I don't like is that Toyota gapped higher today. Toyota gapped higher up to 176. So let me go over this because Toyota is the one name that's been absolutely beaten down and has yet to recover while many other names have recovered. So look, this is what TM looks like, Toyota Motors. What do I like about TM? I love stocks that trade like this. For those who watch Masters in Trading, you see me talking about stocks that trade like this. Stocks that trade like this, I call them gappy. Gappy stocks are awesome for us long option traders because when stocks gap, they move further than most people are willing to hold their stocks for. So when we can find stocks like this that gap all over the place, it's something that we may consider doing a trade in. So let me talk about Toyota. Because Toyota is offered, put some notes on here, TM has underperformed, but it's relatively insulated from its U.S. production. If tariffs are delayed or softened, TM could rebound and looks attractive for long-term investors. Also looking at HMC. HMC faces margin pressure. Stock could drop further if tariff persists. And then GM and Ford. So these are the names that I think are most susceptible to tariffs. I think we have some little news coming out of Washington today about these. But HMC, it's kind of rallied a little bit. Here's HMC. It's kind of like in the middle of its range for 2025. Yeah, I'm not looking at you just yet. It's TMC. But TM, on the other hand, is still really offered. It's got a little bounce today, but if you're looking for something to do with the tariffs coming, TM is pretty freaking inexpensive. And I would think that TM is going to rally going into July 9th. I just think it's the only car company that's still offered as much as it is. What else do I have on here? Oh, I got my charts. We compare things, we look at things as a divergence. So when I look at these names, I want to look at them all together. So HMC, as I just said, it's stronger than TM. If I look at them together, and this I go back 2 years, over 2 years, Toyota is down 16%, while Honda is only down 10%. If we look further out, 5 years, look how correlated TM, the white, and HMC is the blue. So whenever I'm trading, I'm always looking to tie something down. And when I mean tie it down, I use the analogy of a dog at a beach where you can put his leash in the ground and he's got 360 degrees. He can run all around that leash, but he can't get too far, right? He's tied down. So when I'm looking for a name, I want to be able to tie it down. And when I mean tie it down, I mean if I'm going to buy something, what could I potentially sell against it? So TM and HMC, they move together like brother and sister. Once in a while, they'll separate. When they separate, it'll behoove you to get long the cheaper one and potentially get short the more expensive one. Well, right now, that's kind of presenting again, going into this July 9th, I think Toyota Motors is just too inexpensive. Something to chew on. Again, masterthantrading.com/challenge 2025 for anybody who has not yet entered the challenge. I put this on because this was from yesterday. And we talked about being bullish because the VIX 90 was trading lower, the VVIX was trading lower, and the VIX were all trading lower. Let's get a question. Hey, Mark. Mark, what's going on, buddy? Mark, is this your first time joining or just your first question? I'm going to pull up some tools in order that I can analyze your question or look at your question. Hey, Nancy. If I'm saying something it's too inexpensive, Nancy, right now I'm not really sharing a trade. I'm just sharing a few ideas, but not really an actionable trade. I just really want to show you overall why I think the market is super strong and how we look as far as divergences. Mark, awesome. Welcome, buddy. Thank you so much. I appreciate the trust. Okay, so the question is, Core's volatility spiked because of a potential takeover. Just pulling up an internet browser because I got to do a little bit of research to answer your question. So let's do this. Let's go here. Who's trying to take over Core's? This is Perplexity. I'm learning about Core's. Okay, CoreWeave and AI cloud infrastructure. Okay. So they came in with a $5 bid, Mark, right? That they didn't care. They didn't want any part of that. Then they came in with a $15 bid. Stock's trading 17. It sounds like this stock is about $20 or $23 stock, right? Yeah. I'll tell you, this stock is going to end up trading right here, and it's going to just fall asleep. So it's too late to do any trades here. It just is. Volatility. So they have a $15 bid now for CoreWeave. So right away, you have a floor for the stock. Now, if we look at the options, guys, I'm just answering a question from Mark. I am not sharing a trade in cores. I look for trades before these announcements. Once these announcements come out, I'm not really looking for the trade. Look at how options are pricing in. Good question, Mark. So this is skew, S-K-E-W. Last trade 16, right? The 20s are trading 85 cents. The 14s are trading 75 cents. So the market is skewing this thing to go higher, which it certainly should. Trades that are not terrible in here are downside put spreads, bullish put spreads, cash secured puts even too. Selling something down here, just knowing that there's a $15 bid on the stock. So cores volatility did pop based upon this news. If this is going to go through, volatility will slowly come out of the market. Now, if they remove that $15 bid, cores will drop down to 14, 13. Volatility will spike again, but again, it'll still end up, in my opinion, getting up to $21 or $22. This is now a merger arbitrage trade, Mark. I don't love it because that news is already out, but if you're getting before that news, I do. Mark, does that answer your question? And to these expected moves don't matter once a takeover bid comes in. So not a trade I would do. I'm actually, yeah, sure. Just waiting. Mark's got another question. Let me show you this, guys. This is unbelievable to me. Not that. Not that. Come on, JR. Let's see something unbelievable. If you get in a spread, your long will be expensive, especially when volatility comes out. Maybe. It's okay though. Right? So what? Here. Let's see if we can do a little demonstration. Well, okay. But Mark, so what? So I'm just waiting. If you get in a spread, your long will be expensive, especially when volatility comes out. I don't think that's a big deal. I wouldn't be too concerned about that. Or maybe if you have an example, that would be better to go over. Let's go through, see if anything's Katos, guys. Katos is strong. Katos raised a whole bunch of money. Got hit, and it's right back up. Katos is very, very strong. Yesterday raised $500 million. Raised that money in no time. Stock is up huge today. Katos is that little drone maker. Russell is obnoxiously inexpensive to the QQQ. Let me show you exactly how inexpensive the Russell is. These are just thinkorswim tools that are available for our all access community. Okay. Let me show you. Like, this is something, by the way, I don't think I've ever seen in my career. This is the NASDAQ starting from right back here, July 1st, 2020. This shows one NASDAQ against two Russell. So if you wanted to put this position on, you would sell one NASDAQ and you would buy two Russell. But I'm just showing you how strong the NASDAQ, the QQQ, is relative to the Russell 2000. The most expensive like we've ever seen it, and still going strong. So if you're on there and you're waiting for your small caps to rally, you're waiting. You need the NASDAQ to chill out if those small caps are going to rally. Okay? That's kind of what I got, guys. Have an awesome weekend, Mark. I appreciate the question. Everybody in All Access, you guys hang tight. We're going to come right back for you guys. Thank you, everybody, for watching. Give a thumbs up. Make sure you get in that challenge. See you guys in the Discord. Thanks for watching, everybody.